The Nasdaq getting a sweet addition today. Crumbs Bake Shop, maker of cupcakes, has begun trading on the Nasdaq. It had been penny stock before, newly public. Joining us now is the CEO and founder, Jason Bauer. Welcome to InBusiness.
Thank you. Happy to be here.
So you began trading on the Nasdaq today. You're about $13.20 a share right now. Ticker Crumbs.
CRMB.
So you decided to become a public company through a merger agreement a few months ago. Why did you decide to go public at this time?
For my wife and I, who founded the company 8 years ago, we were looking for a vehicle that would allow us to grow the company at a quicker pace than we had when we were a private company, gain additional exposure in the market, and also it's just a perfect growth story to go from 35 stores to 200 stores, or under $3 million in EBITDA to $25–30 million in EBITDA in 3.5–4 years is just a perfect public company story. It's a growth story. And
then those 200 stores, that's your aim for what you want by 2014.
Correct. We have 35 stores operating today, 50 by the end of this year. We're building 15 currently, and our goal is 200 by 2014.
Now, when you became public through this merger agreement, you raised about, what, $27 million in cash at that time?
It was in the 30s, correct.
What did you do with that capital?
It went mostly into the company to fund our future growth, to open up those additional 175 stores.
Now, to go public through that way, you know, SPACs is what, you know, the lingo is, but it's a special purpose acquisition corporation. Mouthful here. We're just calling it a way to have a merger happen to get public without going through a lot of the scrutiny that oftentimes companies that choose to IPO go through. Now, oftentimes when that happens, people raise questions saying there's a reason they chose to go this way. Maybe they couldn't withstand that level of scrutiny. How do you respond to the critics?
I think the level of scrutiny is the same, especially with, you know, the market today and Sarbanes-Oxley. I mean, there's really not much you can do differently by the route that we took versus a traditional IPO. The only difference was that it was speed to market. And if we were to wait to go traditional IPO, we'd probably have to wait a year or two until we were bigger. And at that point, we'd be in a queue with 30, 40, 50 other companies waiting to go public. And this was an opportunity for us to get to the market quicker and ultimately be a public company today on the Nasdaq, no differently than if we IPO'd as other companies do. You know,
you just referenced the fact that there are a number of other cupcake companies out there you expect to go public. People raise the question, is there a cupcake bubble? Because certainly it seems in a lot of cities there are hundreds of cupcake chains opening up right now. Do you think that there is still a level of capital that can be raised privately, or do they have to go public?
I hear that often. When we started, my wife and I, there were 3 cupcake companies in the country. Now there are 500, 8 years later, largely in part to the success that Crumbs has had. And we believe that cupcakes are part of our dessert culture. They're here to stay. No different than cookies, brownies, cakes. I think ultimately when people start to track our industry, they'll see that as cupcake sales continue to increase, cake sales decrease. That's kind of the trade-off. But we, you know, believe in our product, we believe in our model, and we'll continue to open up the stores throughout the country.
And they're not cheap to buy. They're just short of $4 a cupcake.
Currently, they're $3.75 for a giant, oversized jumbo cupcake. It's actually very good value. It's a 4-inch, 6-ounce filled cupcake. In retail, you know, people complain about a lot of things. Music's too loud, coffee's too hot. We rarely get complaints about our value. It's a good value.
But what I do hear from CEOs or CFOs these days is that it's getting harder for the producers because prices of commodities are up so substantially. Are you going to have to raise beyond that $3.75?
We've been lucky through this point. I mean, people know in the industry and talk in the industry how great coffee margins are. But at the end of the day, cupcake margins are almost as good, just a couple of percentage points less. So what's going on today with commodities has gone on for the past number of years, up and down, and we have not had a price increase in over 3 years. That's not to say that one might not be coming down the road at some point, but we've been lucky up to this point because of the high margins.
How do you know when you're at the point of saturation?
With only 35 stores in 5 or 6 markets, I think we're a long way from that. I think, you know, we're not just a 200-store company. Our goal is 200 in 4 years, but I think we'll get to 500–600 stores at some point, and then maybe have a discussion about does the model need to change. But from 35 to 200, that's enough for right now.
All right. Well, good luck beginning trading today on the Nasdaq.
Appreciate it.
Thanks.